Good morning, guys. It is Monday morning, November 28th, 2016, and this is your weekly zone update. So we're going to cover the weekly zones for our favorite markets, and we're going to look at some new scan features that I just brought in, which I'm pretty excited about. So let's get right to it. Alright, first up is the S&P 500 futures. So you can see here that we haven't closed below the prior day's low yet. In fact, we haven't even challenged the prior day's low since since we made that low back here, and I'd mentioned that it was high time for a rally, but did not expect anything like what we've seen here. So anyway, weekly zones for the week in the S&Ps is 2271 on the high side, 2137 on the low side. So how am I going to play that? I'm not going to sell the strangle this morning. Just know there's no premium, guys. It's not worth it. So we just wait for the market to throw us something that we can work with. Excuse me. And what we can work with here is a down move. I know it looks like the market's never going down. I know when it gets into a position like this, it never goes down. It just continues to chug upward, onward and upward until it doesn't. So you just have to wait for it. And when the IV is as low as it is in the S&Ps, it does not play to put the Monday morning trade on. But what we can do is, let's say that the unexpected happens, like it always does at some point in time, and we get a 20 handle down move. I'm going to sell that first level or this level right here. I'm primarily going to look at this level here first, the 21, we'll call it 57 or so. I'll look at that level first. If we get a good vicious down move, 20 to 30 handles, and that's my range to start looking, and then that's my first area to sell against. I'll sell against that with confidence because this market is it's not done on the upside. So if I get hung in one of these positions, the way I'm thinking about it is not worried about it. I'll just continue to sell calls against it, hedge it to the downside, and play it for the rebound. That's kind of like I got hung in that short position a month or so ago. We rode it out for 3 weeks. We kept selling premium against it, and eventually it came in. Made a lot of money on it. So same play here, but that's how I'm going to play that this week. Wait for the down move, sell this level. Guys, even if we wait till Thursday and we don't get a down move until Thursday, you can still sell this level right here and do really well. You hit our target for the week. Alright, let's take a look at the bonds. Bonds are holding after the slaughter fest that has occurred here in the across the interest rate markets. Again, things are going to start to unwind because of this really idiotic negative interest rate environment. We didn't fall prey to that in practice or in practicality, but we were talking about it as if it was already going to happen in our markets. Guys, that's so ludicrous. It's not even funny. In these other markets that are actually in a negative interest rate environment, they're going to get slaughtered. I mean, it's going to be just a complete amputation without any anesthetics. Once those markets fully realize how ridiculous the central bankers were in trying to prop this stuff up. So let's just hope that fundamentals change and those guys get back to reality before the market corrects what they've done. When the market corrects what man has tried to manipulate, it's an ugly event, guys. It really is. If man can get in there and soften the blow a little bit and realize the mistake he's made, it'll come out a lot easier. But when Mr. Market goes in there and decides enough is enough, enough's enough. Alright, so weekly zones in crude. I have never seen the weekly zone in crude this wide before. This is like selling the levels in crude for the weekly time frame is like selling a strangle in the crude market at the 45 or 60 day mark. It is as wide as I've ever seen. $13 wide from top to bottom for a weekly zone. So that's huge. So how can we play this? Well, right now I'm just I'm monitoring my strangle that I have on. So you can't. This is kind of the levels in the F7 that I have on, corresponds with this market. This is the F7. They switched over, so that's what we're monitoring now. Anyway, this is what we have in crude. So 52.75 on the upside, 39.85 on the downside. Dollar zones: 104.81 upside, 98.09 to the downside. Gold: 12.39 on the upside, 11.45 on the downside. Again, let's go back. Yeah, dollar and gold are really working well together. So I mentioned last week that it would be a good one point last week would be good. I think it was this day where a nice pairs trade would be to buy gold and sell the dollar. So had we done that, that would have worked out pretty nicely. And the logic behind that was my bottom picking indicator showed both at an extreme, one at an extreme top, one at an extreme low. So that's a time when you're looking to put a pairs trade on to go ahead and do that. Alright, so that's it for the weekly zones. Now what I'd like to do is just show you a nice little feature here that that I've got programmed. So profit charts, we don't work at all in profit charts, but it's a function on the TD Ameritrade Thinkorswim platform, and it was developed by Tim Knight, who's a regular guest on Tasty Trade. So he brings up and briefs all of his picks on his charting platform, which he still uses profit charts. Now the really neat feature about profit charts is he's gone to the trouble to program all of these little patterns, flag patterns, double bottom patterns, double top patterns. He's actually provided logic to those things so that they plot. So this is what they show up on the charts as, and as the beauty about this is you can scan for these things. So I have a scan built in for all of these breakout patterns, and this is what come up for today. So this is a beautiful little pattern right here that if we break out to the upside, we want to go with that some way, shape, or form. Yeah, I just wanted to show you that. So let's just take a look at some more down here and see how they look. I haven't looked at all these guys. I just pulled up a couple. So here we go. We've got one that's breaking out right there. I'm really interested in these low price stocks. Those are the ones I'm interested in, the breakout patterns. The smaller stocks, I think, they're going to be the way to go. Here's a pick that we're trying to buy right now, as a matter of fact. So this one's showing up, ETRM. So I'm trying to buy this one. It's a weekly chart. Let's look at it. Yeah, so I'm trying to buy this one for like 4 or 5 cents. See if we get a play on it. Yeah, I really like to look at these on a weekly time frame. That's those will have some power behind them. Yeah, just scanning through, looking at a couple of these, seeing what they look like. And here it gives you exactly what pattern it is that you're referencing. All you got to do is place your cursor over it, and it'll tell you. Again, guys, this is going to be important going forward. when we start scanning for all these little breakout stocks. So we'll have something that I can look through each night and try to come up with some of these little small stock breakout patterns. Those are going to be very important going forward. I think the small cap stocks will perform very nicely in this environment that I believe the Trump regime is going to bring in. So anyway, I think that's it. So you know, right now we have this scan in place. We also have our scans for the best businesses in the world, where we're looking for those one-day haircuts where the market just whacks them for whatever reason, and we want to take positions in those. So we'll continue building up our scan selections, and I believe those are going to pay off big for us on directional trades going forward. Hey, that's all I have right now that's all I have right now. So guys, I'm going to sign off, and we'll talk to you later. This is BA saying having a good trade day and good trade week.